Bitcoin just took a serious tumble, and right now, the whole crypto world is feeling the shock. In just a few weeks, more than $1 trillion of value has disappeared from the global crypto market. That's not a small drop, it's massive, and it's shaking up how people think about crypto right now. What's happening is simple but powerful. Bitcoin's recent drop has triggered a chain reaction. It's not just about Bitcoin falling, other cryptocurrencies are falling too. Liquidity is drying up, and traders are getting forced out of their positions. When Bitcoin sneezes, the rest of the market catches a cold, and this time it's a full blast fever. So why did this crash happen? One of the main reasons is that many investors were using lots of leverage, meaning they borrowed money to bet on crypto going higher. But when prices began to fall, those leveraged bets came under pressure and stop-loss orders started to trigger. That made more people sell, which pushed the price down further, creating a domino effect. It's like one domino falls, then 10, then 100. Suddenly, a lot of value is wiped out fast. Alongside forced selling, big institutions are pulling money out too. Some investors who bought crypto when things looked hot are now stepping aside. They're worried about where the market is going, especially with uncertainty about global rates and economic strength. Without those big players fueling the rally, the market is more fragile, and corrections hit even harder. This wild drop has hit both Bitcoin and altcoins. Bitcoin alone has lost a huge chunk of its value, but other coins like Ethereum, XRP, Solana, and many more have also been dragged down. When Bitcoin starts falling fast, altcoins usually don't escape unscathed. They're often more volatile and more exposed to speculative money leaving the market. What makes this even more serious is that this isn't just a routine pullback. Analysts are calling it a structural reset for crypto. That means some of the risky, highly leveraged bets might be getting cleaned out for good. The idea is that excess speculative capital is being washed away, and what might come next is a more stable, less frothy market, but that process can be painful. People are also talking a lot about macro risk. Big questions around interest rates, central bank policy, and global tech valuation are making investors more cautious. Crypto isn't living in isolation. It's strongly tied to the bigger financial system now. As risk appetite fades, speculative assets like crypto suffer more deeply. Investor psychology is playing a big role here too. There's a lot of fear, and when fear grows, people don't just sell, they panic. That panic fuels more selling, and it can go on pretty fast. Many traders are getting squeezed, and long-term holders are wondering, is this just another dip, or is something more broken? That kind of doubt fuels uncertainty, which makes recovery harder in the short term. Another issue is liquidity. There's less depth in the market now. With fewer people willing to take big bets, the market is thinner. That means even moderate-sized sell orders can move prices a lot. In a healthy market, there are plenty of buyers to absorb such moves. But right now that cushion is weaker, so prices swing more severely. This wipeout of over $1 trillion is not just a number, it represents real, unrealized losses for many investors. Some may hold through it if they believe in crypto's long-term potential. Others may decide to cut risk, reduce exposure, or even exit entirely. This moment could separate long-term believers from speculative traders. Now, what could happen going forward? There are a few possible scenarios. One possibility is a recovery bounce. If macro conditions improve, maybe central banks signal some easing, or economic data softens risk appetite could return. That could bring money back into crypto, pushing prices higher again. Some investors will view this crash as a buying opportunity, especially if the market finds a strong bottom. Another scenario is further decline. If the downward pressure continues and if leverage remains high, more liquidations could follow. That would push prices even lower, possibly testing much deeper support zones. In that kind of world, crypto could remain under pressure for a while, with big drops and volatile swings still ahead. There's also a middle path, a choppy, range-bound market. In that scenario, crypto might not collapse further, but it could stay stuck in a wide trading band for weeks or months. That would give the market time to absorb the current shock, clear out weak hands, and rebuild confidence. For long-term investors, this could be a calmer period, but for short-term traders, it might feel like torture as the price bounces back and forth without direction. If you're holding crypto right now, this is a moment to think carefully. Do you trust your long-term thesis? Do you believe crypto will rebound? Or do you want to reduce risk while you still can? It might be wise to set tighter stops or even scale out part of your holding. If you're a trader, now could be the time to be especially cautious. Avoid aggressive leverage, don't overextend, and make sure you know how much pain you're willing to take if things go further against you. If you're just watching from the sidelines, this crash is also a valuable lesson. Crypto is not immune to macro forces anymore. It's not simply about technology or decentralization. The big financial system still casts a long shadow. Understanding that connection is important if you plan to dive in later. It's also critical to follow macro news closely in the coming days and weeks. Use economic reports, central bank commentary, and global risk events as signals. Combine that with on-chain data like big wallet flows or derivatives positioning to get a sense of where big players might be headed. For long-term thinkers, this could be a test of conviction. Why did you invest in crypto in the first place? If your belief is rooted in its long-term role as digital money, as decentralized finance, or as a store of value, then maybe this storm is a chance to build or hold. But if you were in just for short-term gains, now is a moment to reassess. For the more risk-averse or newer investors, consider scaling into the market rather than going all in. Use dollar-cost averaging, set clear risk targets, and don't buy just because prices are falling. Falling prices can be tempting, but without a clear plan, you might be catching a falling knife. Beyond Bitcoin, keep an eye on altcoins too. Some of them could recover if Bitcoin stabilizes, but others may suffer more. Evaluate the strength of each project, its use case, and how much risk you want to take on. Not all coins are equal. Some will likely outperform when things calm down, while others may lag or continue to drop. One hidden risk right now is that more liquidations could happen. If prices don't find support soon, more leveraged positions could be forced to close, which would push prices even lower quickly. That feedback loop price drop triggers liquidations, triggers more drop is exactly what's hurting the market now. Another thing to watch is stablecoins. During panic moments, traders often move into stablecoins to preserve value, which drains risk capital from more volatile assets. If stablecoin balances are rising, it could be a sign that fear is growing and people are pulling out of risk. Emotionally, this is a tough moment, but it's also a chance to grow as an investor. The way you react here could define your future in crypto. Panic selling might save some capital now, but it can also kill your long-term gains. Staying calm, thinking clearly, and acting with a cool head could pay off much more. Remember, volatility is part of the crypto game. Big moves up often come with big moves down. The people who survive are often those who accept that risk, manage it carefully, and don't let emotion drive all their decisions. This recent wipeout could also be a reset, a chance for the market to clean out speculative excess and build a stronger foundation. If that happens, the next leg of growth could come on healthier footing. But to get there, we need stability, not just hope. If you believe in crypto's long-term future, this might be exactly the kind of test your conviction needed. If you're a short-term trader, this is a moment to be cautious, manage risk, and protect your capital. Either way, you can't ignore what's going on. One final thing, talk to others, stay informed, and don't go it alone. Use good sources, join communities, but also think for yourself. What you decide to do now matters not just for your wallet today, but for your potential in the next phase of crypto. So to wrap up, over $1 trillion of crypto value has vanished after Bitcoin's drop. This happened because of high leverage, liquidations, and macro worries. The outcome is still unclear. We could see a bounce, more pain, or a long grind. Your choice now, stay calm, manage risk, and be smart with your exposure. If you thought this breakdown helped you understand what's going on, please hit that like button, drop a comment with your take. Do you think crypto comes back quickly or stays weak? And subscribe if you want more crypto news like this. Turn on the notification bell so you never miss an update, because in times like these, staying informed is everything. Thanks for watching, stay cool, stay sharp, and I'll catch you in the next video where we'll dive into which altcoins are most likely to survive this crash and what could spark the next big crypto rally.